is HDFC Bank's management. All right, that's Paresh, Sukthankar, as you know, and let's just quickly run you through the numbers that just came in a few seconds ago from HDFC Bank. So we had a net profit growth of 2807 versus the expectation of 2812. Net interest income coming in at 6,013 crores versus 5,971 crores. Gross NPAs improved marginally, so 0.9% versus 1% quarter-on-quarter. Net NPAs at 0.2% versus 0.3%. We saw a loan growth of more than 20%, and here is Paresh, Sukthankar.
Before I plunge into the results, I just want to tell you two milestones that we crossed this year. We crossed 4,000 branches. In fact, we are at 4,014 branches. And for the full year profits, we crossed the 10,000 crore mark. So I think those were two sort of somewhat important milestones for us. Let me walk you through the key financials on the P&L and then through the balance sheet as well. Net revenues for the quarter, this is obviously the quarter ended March, were at 8,576 crores, which was an increase of 23% over the corresponding quarter of last year. Roughly 70% of net revenues are net interest income, and the net interest income growth was 21.4%, which came on the back of balance sheet growth and stable net interest margin at 4.4%. Other income, which is roughly 30%, 29.9% of the net revenues, grew this quarter at 28.1%. And if you look at the main components of other income, almost 72% of other income is fees and commissions, and fees and commissions at 1,834 crores were up 20.6%. And like I said, the overall other income grew at about 28.1%. Operating expenses for the quarter were at 3,855 crores. Expenses increased by 21.4%, and the cost to income ratio therefore for the quarter was 44.9% as against 45.7% for the corresponding quarter of last year. So clearly on the cost to income ratio improvement, we've seen that coming through in this quarter as well. Total provisions were at 576.7 crores, which is somewhat in line with what they were in the sequential quarter, which was at about 560 crores. So they're up about 2.7% sequentially. Year on year, there's an increase. Again, if you look at the components of the total provisions, you'll find that general provisions have gone up from 28 crores to 119 crores, reflecting the loan growth. And of course, there's been an increase in specific provisions and other provisions, which then takes the total increase to total provisions to 577 crores. Net profit for the quarter was at 2,806.9 crores, which is a growth of 20.6% over the corresponding quarter of last year. Just a couple of annual figures. All the figures that I covered so far were for the quarter, and just to walk you through a couple of numbers for the full financial year. So for the full financial year, net interest income was at 22,396 crores, which registered a growth of 21.2%. Fees and commission growth for the full year was at 14.8%. Cost to income ratio for the full year was 44.6 as against 45.6 for the previous year. So on a full year basis, again, there's been a roughly 1% improvement in the cost to income ratio. And for the year as a whole, again, net profit grew by 20.5%, touching 10,215.9 crores. Moving on to some balance sheet items now. The overall balance sheet growth was 20.1%, and we touched 5,90,503 crores. Once again, 5.9 lakh crores. Within that, loans and advances grew by 20.6% to touch 65,000 crores. Deposit growth was even healthier at 22.7%, touching 4.5 lakh crores. And the CASA ratio as of March 31st was at 44%. Again, coming on the back of fairly strong growth both in savings and current accounts. Current account growth was about 19.6% year on year, and savings account deposit growth was 21.1% year on year. We've continued our branch expansion strategy through the year. In fact, for the year as a whole, we added 611 branches, of which 355 branches were added in the last quarter. And again, as at therefore the end of March, we had 4,014 branches across 2,464 cities. And if you look at the mix of those branches, about 55% of those branches are in semi-urban and rural areas. Of the 611 branches that we added in this financial year, about 290 were added in urban and metropolitan areas. So again, this year there's been a roughly half and half addition between urban metropolitan on the one hand and semi-urban and rural on the other. On the asset quality front, again, asset quality has been roughly stable. The gross NPA number at 0.93 is a little lower. That's net of some sell-offs, but if you put that back, it's still about 1%, which is comparable to essentially the 1% that we had last year. So, and net NPAs are at 0.24%. You're all aware, of course, that we had raised capital, so the capital adequacy for the year end also has, stands at a much healthier number. The overall CAPAD is at 16.8%. Tier 1 CAR, Tier 1 capital adequacy is at 13.7%. The Board of Directors have recommended a dividend of 8 rupees per equity share of 2 rupees. This compares with the 6 rupees 85 paisa dividend that was declared last year. Those are some of the key highlights of the results. I'll be happy to take your questions.
So your cost to income ratio actually jumped from 42 to 44.9%.
That was sequentially.
Yes,
on a sequentially, you're right. But as I mentioned earlier, in this quarter, we've added 300 and odd branches. So we've remained in an extremely high investment mode, particularly in this quarter. Of the 611 branches that we added on a full year basis, 355 were added in this quarter. So there has been a sequential pickup in the cost to income ratio, but both for the quarter on a year-on-year basis as well as for the year as a whole, there has been a marginal improvement in the cost to income ratio.
Specific loan loss provision is at about 424 crores. Could you tell us the fresh slippage that you have in this quarter?
So if you look at the specific provisions, in fact, you'll find that whatever increase had been there over the last couple of quarters, that has been the pace at which we've been making specific provisions. So if you look at the slippages this quarter, they first of all, if you look at, there was something on the corporate side, part of which also is, when I spoke about the 0.93%, that's net of a sell-off. If you put that back, it's still 1%, so it's been flat year on year. The actual specific provisions were 425 crores for this quarter as against 320 crores for the corresponding quarter of last year, which is a similar growth to what you've seen in the last couple of quarters as well.
What is the outlook on branch expansion, especially on CASA? CASA has improved to around 44%. So could you tell us what is the trend going forward?
So as far as branch expansion is concerned, we were in a mode where we were typically adding about 300-400 branches. However, we stepped that up in the last quarter to touch 600. I think if you look at the next year, at this point of time, we would probably want to add roughly 300 branches because we have front-ended some of that branch expansion by adding a few more branches which we could have otherwise added in the next financial year in the last quarter of this financial year as well. Again, when you look at the number of cities that we were adding, a lot of the newer branches that we've added in the last quarter, and for that matter in the last financial year, we now have a larger number of branches being added in existing cities as well. So there's a combination of course, expanding the reach in terms of new locations. I think the pace of that has come off a little because we have already expanded our footprint substantially. And as we're now adding a few more of urban branches as well in a certain proportion, I think we'll add about roughly 300 branches or somewhere close to that in the next financial year. I don't have that off the cuff.
How's the demand for credit shaping up in the corporate segment?
So we've, if you look at our overall loan growth of 20-odd%, there are two ways of looking at it. There's a segmental reporting piece, which is based on the Basel II classification.
Well, and that's HDFC Bank. But